And what did you make of the session today, Julia?
It was a huge session on the market, but unfortunately a negative one. The volumes were absolutely massive for a Thursday. We saw $5.8 billion worth of stock just being traded on the ASX. So that really does point to international involvement in the market today. And certainly when you have a look at when the market was declining and when the heavy selling was occurring, that's also when we did see a fall in the Aussie dollar, pointing to selling by international investors. The banks were the big losers of the day. In fact, they've been the big losers of the week. And I guess there are a number of things weighing. First of all, it does look like increased international participation selling the banks. It's not surprising given that we've seen one of the biggest brokers around the globe, Goldman Sachs, yesterday afternoon in a note out to clients warning that of the risks of Australia losing its AAA rating, or even the risk of a negative outlook downgrade. So I guess we did see selling in the banks, but not only that, we have some major huge events coming up in the next week. First of all, we have the RBA rates decision. And with a growing expectation that rates will remain on hold, we've seen that's been a negative for some of the high-yielding areas. And also we see earnings season. 3 out of the big 4 banks will report earnings. On Monday we'll see Westpac, on Tuesday we'll see ANZ, and then on Thursday we'll see NAB. So lots of risks in terms of the banks. Unfortunately, all this added up to a negative session for the banks. In fact, if I can just bring up the market map for the Australian share market, this is what it looks like, and you can see that big chunk of red just there. They're the big 4 banks. The worst impact on our markets today, although we did see the iron ore stocks also losing ground after iron ore prices were down by 4.6%, but by far the biggest impact on the market today were the banks.
Like an opportunity from your perspective?
I think it depends on where you think interest rates are headed, because this yield and this chase for yield is really being driven by US interest rates as well as domestic rates as well. The FOMC meeting was an important one. And in terms of the strength of the Australian economy, I guess there is a big question mark because of where we've seen iron ore and oil prices in the last 12 months. Of course, iron ore prices, despite being down by 4.6% overnight, have seen a recovery of about 20% since the 2nd of April. So a bit of a positive there, but a lot of it does depend on rates. So next week's going to be a huge week for the banks. Not only do we see a rates decision, but we also get an insight into whether that earnings growth from the banks is flowing through and whether that dividend growth is flowing through as well.
Would it be Julia, be a brave person, do you think, to bet against the banks in terms of earnings, because they have delivered so frequently, so repeatedly in the past?
I think as long as the domestic housing market is powering along, you will see banks like Westpac and Commonwealth Bank outperforming. I think the concern is that ANZ, with the exposure to China, could see lower growth rates coming through, and we have seen ANZ shares sold down 4.8% in the week to date so far. And then NAB's problems are well known. We know about the UK problems there. So NAB has constantly been an underperformer because of that, and will probably continue to do so. But in terms of banking exposure, it's probably the ones with that domestic exposure to the domestic residential market doing the best, and that's Westpac and Commonwealth Bank.
Mike, do you hold a...
Can I just say, if there is a cut next week, then we are going to see the banks rally. I mean, there is one reason why high-yielding stocks are popular all around the globe, and that's because a lot of the zero interest rate policies, the quantitative easing, the negative interest rates that we're seeing in parts of the globe. You only have to look at performance around the region today. There was one market which was trading higher, and that was the New Zealand market, which was up by 0.4%, and that was on speculation that we could see a cut in interest rates in the New Zealand market. So in terms of rates determining equity market direction, a massive impact at the moment. And if you find that we do see a rate cut by the RBA next week, you'll find that a lot of fund managers underweight the banks going into this decision, and you'll see a massive rally in those high-yielding stocks.
Mike, I agree with Julie. We're likely to see a bidding war, continued bidding war here.
My view is that TPG will come back for iiNet, and I think it's making a big move here. It's already made a strategic move in terms of Amcon with that 10% stake, upping its stake to 18.6%. It has shown in the past that it is willing to buy infrastructure. We've seen it buying Pipe Networks. We saw it buying AAPT. It has its own fibre to the building nodes. So even down the track, maybe after an iiNet acquisition, that we could see it even going after Amcor's fibre optic network as well. But it's a massive opportunity in this space. Vocus, of course, unhappy with TPG's move and saying that it's reverted to the competition watchdog. But I guess under the Competition and Consumer Act, it's really hard to see how TPG's behaviour could be seen as anti-competitive to the market, given if the Vocus and the Amcom merger doesn't go ahead, that you will see more parties and more competition in the space rather than less.
All right, look, unfortunately, we have run out